Welcome back, guys and gals, to our little cozy corner of cyberspace called the Northern Miner Podcast. I am your host, Matthew Keevil, and we are 1 week away from PDAC. That is right. I've had a few compatriots hop planes already to head out to Toronto, prepping up for the big Prospects and Developers Conference starting on March 5th, running through the 8th. So that is next week. So our Toronto office will be busy. We have a beautiful 44-page mega issue for the PDAC that is set to hit the printers, and it is loaded with good stuff. So do stop by our booth over at the conference and pick up an edition if you have an opportunity. And some of the stuff we'll be dealing with this week in the podcast is sort of a preamble, if you will, to some stuff in the PDAC issue. This week, Lesley in the Geology Corner, we will once again be digging into some tips for investors. This time, we're rolling it back. Previously, we're not rolling our share structure back. We're rolling back the topic to an earlier stage of exploration product. And what I mean when I say that is previously we'd done a Geology Corner on 43-101 reports as they relate to preliminary economic assessments and pre-feasibility studies, etc. This week, Lesley's going to dig a little bit into earlier stage exploration. And so these aren't actually a lot of the times 43-101 compliant. Well, they are compliant with the exchange, but more so in terms of reporting prospecting targets and drill results. We'll dig a little bit into geophysics, geochemistry, some seismic, interestingly enough, which we've heard a little bit of buzz about recently. So this is more of a prospecting and early stage exploration version of the Geology Corner, wherein Lesley's going to sort of outline for us what she looks for when companies report drill results, report how they are generating targets and prospects on their property, and sort of what she looks for in terms of geophysical and geochemical results. Now, pre-warning sort of thing. This stuff is all extremely complicated, and Lesley's going to help us as best she can, but obviously we're always all learning a lot about geophysics and geochemistry. So this is sort of let's say a 101 episode of the Geology Corner, where we dig into a little bit about what companies mean when they say certain things in press releases, pursuant to target generation, drilling, etc. So I'm excited about that. The other thing I have, and this is going to be running in our full-on PDAC issue next week, is I had a fairly lengthy chat with Lukas Lundin, and the full transcript of which, well, not the full transcript, but the best parts, will be running in the paper next week, so do check that out. What I have is a little bit of a sneak peek this week, just some comments from Lukas Lundin on markets, namely on zinc, copper, and the acquisition of the Fruta del Norte gold project in Ecuador, and sort of how that's going. So later in the show, we'll have about 2.5 minutes of just Lukas talking about some of his experiences over the recent bear market and where he thinks we are right now and how things are sort of going with the various Lundin mining enterprises. But before we get into all of that, we will run through a little bit of our macro to start the show. Gold lost a little bit of momentum to start the week, though it did rally a little bit on Tuesday and was trading at $1,248.50 per ounce at the time of recording. Silver was trading at $18.35 per ounce. Copper was trading at $2.71 per pound, while West Texas Intermediate oil was trading at $53.98 per barrel. Financial media is paying close attention to U.S. President Trump's speech to Congress on Tuesday night. That would be February 28th. He is expected to at least provide some clues on his tax-cutting plans and budget plans. In addition, Federal Chair Janet Yellen is expected to provide testimony, perhaps dropping clues regarding her own thoughts on a rate hike in March. Meanwhile, there remains no sign of resolution at BHP's East Escondida copper mine in Chile. On February 9th, 2,500 workers began a strike after contract talks with the company failed. Copper prices have been going up since on expected tighter supply conditions. The mine produced about 5% of the world's copper in 2016. Last week, we reported that the two sides briefly returned to the table for government-mediated talks, though those discussions ended after a single meeting. There has been somewhat frosty relations with the union telling Reuters on Monday it had not been approached about resuming talks and denied a report quoting the BHP chief executive officer saying the two sides were back at the table. So there does not appear to be any near-term resolution to this issue. And we did talk at length over the past two shows about potential copper supply concerns globally. Lukas Lundin, during his little talk we'll get to momentarily, or actually after the Geology Corner, I should say, also mentions a sort of a bullish thesis on copper investment. So some things we are keeping our eye on as we move forward here. And now let's have a little fun here with the Geology Corner. As mentioned, we will be digging into some technical terminology in terms of geophysics and geochemistry. Lesley's going to sort of lay it out for us in terms of if you're not a geologist, I am also not a geologist. Just a few terms and tips or tricks as far as reading and interpreting things like maybe target generation if companies put out that they have a big geophysical anomaly that looks really promising, or coincidental geophysical and geochemical anomalies. Someone might be like, is that important? So Lesley is going to lay that all out for us. We'll talk a little bit about a case study that she picked in terms of the best practices for generating exploration stage targets. We'll also talk about some new technologies, including seismic, which has been used in the oil and gas industry, but has been gaining a little bit of buzz in the terms of hard rock metal exploration, and a bunch of other things. So let's get to it right now. It's about a 20-minute Geology Corner, so a nice meaty one for everybody. And I will see you on the flip side just to introduce the Lukas Lundin snippet that we have leading into my major interview piece with him that will be coming out in our PDAC issue next week.
Hello, you are listening to this week's Geology Corner. I'm Lesley Stokes, and I've got my best buddy here,
Matt Keeble. I'm always sitting around somewhere in the general vicinity of the podcast, like just kind of loitering, watching, making sure everything's not broken and my recorder's not on fire. Yeah, exactly. So we're back. What are we going to dig into this week?
I decided that for this week's Geology Corner, I wanted to let you all in on a little secret of mine. That even though I'm a geologist, right? Yeah. I find it extremely challenging to interpret a company's geological results presented in news release.
Like drill results?
Just being able to see at face value whether or not a company's project actually does have merit. Mm-hmm. Sometimes, I really have to dive into their technical reports, or I'm searching through government databases to find the information I need to pull together these jagged pieces that are all over the place. And for many investors, I always think it's gosh, they don't even have that option to do that.
No, they don't have the context to or the background to do anything.
No, they don't have the time or the skills. So here I am, a geologist. I kind of struggle with it. So I can't imagine what it's like for investors too. Mm-hmm. So, a lot of times investors are often forced to take a company's exploration pitch at face value, and they dump money into a stock on a total gamble, praying, that it would reap some sort of returns. But there's totally ways to lower your risk when investing in junior explorers. Now,
so we were talking about last week we talked about 43-101 technical words like PEAs and stuff, but now we're taking a step back.
And
looking at earlier stage projects.
Greenfields projects. Now, I touched on some of this stuff in an earlier episode. What was it, podcast 46?
Yeah, we're almost at our 52nd episode, by the way, which is our year anniversary. Yeah. But it was before Roundup.
Yeah, so it was before Roundup, and I talked about ways of being able to see if a company is technically switched on to the project, have a good grasp on it. But there was something else I haven't mentioned, and something else investors can spot in their mission to divide the strong projects from the weaker ones.
Yep.
And that, my friends, is flow.
Flow?
Yeah.
Okay.
Sweet, beautiful flow. We've all had times in our life when everything just falls in place. It's as if the stars align and whatever it is we're doing in life calls us into being and everything makes sense. Now, what I'm trying to imply here is that exploration isn't a total slog to the end goal. It often is. But over my 2 years with the Northern Miner, digging through the news trench, right? And then 10 years investigating deposits as a geologist in the literal trench, a pattern has emerged. And so that is when a company has great quality data at its fingertips, a project with tons of potential will speak for itself. So the company isn't grasping at straws, just trying to come up with a convincing exploration story, desperately trying to keep this project alive.
Or using buzzwords.
Yeah. So instead, the data will make drill targeting almost effortless and fluid, like a smooth flowing river with, of course, a few rapids and a bunch of bends.
Yes.
Just to keep you on your toes.
Yeah, because exploration's never easy.
No.
Yeah.
So, which sounds like a lot more desirable than a project being stuck in an eddy or a stagnant pool that's drying up in a drought,
It's probably good fishing there in that eddy, though.
Maybe. So, what exactly do I mean by flow? And when I say flow, I mean consistency between the geological data sets. Okay? So, when geologists are generating targets, this is what we do. We work usually with 5 main data sets. We have geophysics, we have geochemistry, surface rock chip or channel samples, and geological maps that outline lithology, structure, and alteration. That's pretty much the guts of it, right? And depending on what type of deposit we're looking for, they look for anomalies in the data and whether those anomalies overlap or flow between, the different sets. The more the anomalies overlap with each other, the more robust the target becomes. So the strongest targets are then flagged for drilling, and then the companies will pitch that story to the market, and that's seriously like what happens.
So that's what the investor relations team gets these targets based on the layering of different sort of modeling techniques by the geologists, and then they go out and
totally
toot the horn.
Good job, Matt.
Yeah.
In one sentence, go. So, and an investor doesn't need to understand all the science behind the anomalies. They just need to know if there are any and whether they overlap to conclude whether or not a company is working with a robust target. And then from that, they can gauge the risk of the project. So greenfields projects, they're all risky, but ones with lower risk have targets that have multiple data sets behind them. On the other hand, if a company, say for example, hits grade in a drill hole, but doesn't have any data sets to back that target up, then they're chasing grade completely blind.
Wildcat.
Which is mostly like wildcat drilling, but kind of in a different, not using the word wildcat. It's just like, it's open in all directions. It's like, oh, is it?
I hear that a lot. It's open in all directions, but we haven't drilled anywhere else. So
so I mean, and that's kind of it. So I really am leaning towards, of course, the star example of generating lower risk and a high risk exploration play is SolGold's Cascabel porphyry copper gold project in northern Ecuador.
I've heard a lot about this.
Which I just finished writing up a story because I'm totally enamored with them. Over the past 4 years, they've collected a ton of data on their 50 square kilometer property, and they've done, geophysics, soils, geological mapping, structure mapping, you name it, the usual artillery that explorers use to hone in on these deposits. But when you go into their company website presentation, it's cool because they'll actually walk you through each data set and showing where each of these anomalies occur and where they overlap. And from that, they've been able to identify 14 potential porphyry centers on their property, one of which being El Pala Central, which has already delivered some like jaw-dropping intersections of over a kilometer of like 1% copper equivalent.
Yeah, they've had some impressive assays.
Crazy. So, 19 holes in the project to date. 17 have hit like whopping scales of mineralization. And when I spoke with Jason Ward, the exploration manager with SolGold at this year's AME Roundup in Vancouver, he joked with me and he said that drilling for them is more like, quote unquote, a grade control exercise because that's how much confidence they have in their targets. For them, targeting is easy. Whereas for me, it makes my job as a writer who has to report on this project so effortless because I don't have to dig deep for the information I need. And for the investor, it leaves no question in the project's potential because the company's like, here are the anomalies, these are the overlapping, this is why this target is a target, it's legitimate, it's not like we're just comparing it to some other big deposit and make you, just think that that's what it's based on. So I don't know. So for me, it's like, in summary, I guess the only hard thing about geology really are the rocks themselves, and even they can be broken into. So a company that's worth investing in has generated really robust targets from quality data sets, stuff that they actually took time and effort into collecting. And they just don't follow mineralized zones blind. And they'll tell that story, and they'll show investors what it is that they're actually targeting and what they're all about. And that's the confidence that anybody should really look for and jump onto that flow, because it'll just be smooth sailing, hopefully, until they hit that rapid bend or they hit,
Now, I have a question for maybe the listener.
My voice is so dry today. I'm like all raspy.
Have
By
more
the way,
tea.
it's like,
Have more tea.
And I just got like a steak voice.
So you mentioned before that there was sort of the 5 main data sets that geologists look at when coming up with targets. And so people see a lot of different terms probably in press releases in terms of geophysics, in terms of geochemistry. Maybe if just like a quick briefer on why you use those things and what exactly they are.
Ooh.
Yeah, like if you could just so I know there's soil geochemistry obviously, and that's trace or mineralization in tills or soils, right?
Yeah, so it's super complex. Like soil geochemistry is like a whole other science. So what these people are looking for is just like indicator minerals that signal like an increased concentration in certain elements that usually are associated with a porphyry system or a gold mineralizing system or whatever. Or they could also use like that; those are pathfinders, right?
Yeah.
Or they can just use the direct elements themselves, which is copper, gold, zinc, whatever. But a lot of times, like in SolGold, for example, copper doesn't sit well in that tropical environment. It moves. It's like flushes out.
Yeah.
And so they couldn't really use that. Whereas molybdenum doesn't move very well, but it signals that there's like porphyry in the area. So they use they use a lot of Molly anomalies to zone in the geochemistry surveys of where it is that they can look in the data sets.
Okay.
So that's geochemistry. So it's a bit of like, there's like huge science on it.
And there's a lot of gold explorers you hear talking about arsenic or...
Antimony.
Yeah. And that, especially in Nevada, I mean, you hear that all the time, right? And that's just a function of, like you said, sort of flow of these minerals in the surface materials.
Well, in the hydrothermal fluids that introduce these metals, they occur within like, a certain temperature and pressure and acidity and pH and oxygen levels, and certain elements like to kind of kick around in those sorts of fluids, and they all tend to have similar sort of like characteristics. And so gold will kick around with arsenic and the likes. So it's being able to understand what the pathfinder elements are and the elements that you can use to like zero in on those deposits in geochemical data sets.
So that's
leveling.
Yeah.
And leveling that data is crazy too, because you can have a baseline concentration in your soils of copper, elevated copper, because you're in a volcanic package.
Yeah.
So you got to level that crap out. Can I say crap? But you got to level it out. So there's a little bit of a robust science behind it, but fundamentally that's kind of the
So this is one of the earlier things you do on a grassroots project. That's why you see people do soil grids.
So useful.
To get started sort of thing.
Yeah, and you got to be able to collect that data good too. You just don't want to be digging a hole.
Well, some companies spend entire field seasons doing soil grids, right? And I mean,
dirt bagging, we call it.
Yeah, dirt bagging. Yeah, I've actually done that too, up around Wassee Lake.
Yeah, that's
actually.
right.
Up near Mackenzie. Yeah. But the other thing you'll see, and I guess maybe we should reference this too, is sometimes you see geochemistry just doesn't work. Right, because the soil's barren, or
there's no soil.
Yeah, or it's glaciated, right?
Glaciated.
So, yeah. So you'll see that too, where companies say geochemistry is pretty much non-useful. And that's one thing. I talked to Adventus Zinc, and they have the deposits in Ireland. They're looking at zinc deposits, and they said the one unique thing about prospecting and target generation in Ireland is that geochemistry is completely useless. So they use seismic. Which is technology that's used in oil and gas a lot. And that's,
I've worked on the seismic. The 2D seismic, everyone's saying that it works great, but it's sketchy because, if you have 2D, you're getting like readings down to like 2 kilometers or more, right?
Yeah.
And the thing is that because you don't have that third dimension, it's hard to triangulate where that reflection is at depth in space. So you could have your 2D seismic, okay? Because people are talking about this a lot.
Yeah, this is a new thing.
This is brand new. So 2D seismic, you have to understand that like with 2D seismic is you can't understand, or you don't know exactly where the location and depth is of that reflector that you see in the sections.
Yep.
You could say, oh, look, there's like an anomaly there, which could be a target, but it could actually be like 600 meters below or 300 meters up.
Because it's two-dimensional.
Because it's two-dimensional.
Yeah.
So doing three-dimensional seismic is a lot more expensive,
Mm-hmm.
but it gives you more of an accurate sense of where it is you should target.
No.
Now, the other thing with seismic, I'll quickly mention,
Yeah.
is if everything's vertically oriented, well, good luck.
Oh, exactly. But maybe just since it's so new, maybe walk us through what is seismic. Like, what are you doing when you're like? Are you measuring obviously like movement in the earth? Like, just like what are
basically
you doing?
like so on a seismic thing, it's kind of cool. It's like this R2D2 sort of machine kind of crawls around the field.
Yeah.
And then they just like lift up and it just drops
and you rock
like
the
bang.
earth.
So this R2D2 thing is like moving through and just dropping and banging as
It's
it
like
goes.
some hydraulic thing that just like crashes.
Yeah, well,
down.
I think the guy was driving ours that day, but
That's
so
cool.
so they do that, and then they have sensors set up all along that line to pick up how like the different velocities and stuff.
Cool. And then the metals obviously give off different readings on.
Well, you would never be unless you have like a sheet of metal. It's mostly to like it really kind of helps highlight structures and different lithological units. And sometimes I know if you have quartz, for example, it'll just be like this washout in the seismic surveys.
Oh, okay.
Because it doesn't actually like kind of, I don't know, I guess the noise kind of goes right through it or whatever.
That makes sense.
So so there's lots of ways to interpret
Where were
that.
you using it?
Down WA, mate.
West Australia. There you go,
Western
West
Australia.
That's awesome. No, I'm glad we actually tackled that because I hear a lot about that now is the seismic stuff because I guess when geochemistry...
So expensive.
Yeah, is it expensive?
It's crazy.
Yeah. And I mean, that kind of segues, I guess, well, we were going to briefly touch on geophysics a little bit too.
Yeah.
And I mean, you hear about sort of ground versus airborne, which is obviously way more expensive, but better. Obviously, airborne's better than ground mag, right? So, I mean, maybe just a little brief introduction on when geophysics might come into play and what it's useful for.
Geophysics is always useful.
Yeah.
But it's also extremely misleading.
Here we go. Yeah.
Right?
Yeah.
No, actually, I'm going to be pursuing a story on this. I'm talking to some geophysics experts on what is commonly misunderstood about geophysics and what are some of its applications and where is it actually super useful.
Okay.
And another case in point was SolGold. They do airborne magnetic surveys, and they've three-dimensionally modeled their anomalies at depth, which has revealed some really interesting correlations between mineralization and the magnetism of the rock, because it's magnetite associated with the quartz vein. So they ended up having like these massive anomalies underneath. And the cool thing that SolGold does, which a lot of companies don't do, is that they this company has taken magnetic mag-sus readings from the drill core.
Okay.
And so what happens then is that they are collecting the exact magnetic response of the rocks in the drill core, and then they take that information and they feed it into the airborne magnetic survey data.
Okay.
Right? And then from that, they're able to create this super accurate magnetic model based on actual data rather than your general idea of the magnetism of a granite, which is you pull it out of a textbook and then you apply it to your model, and that's what a lot of people use in interpreting their surveys. Never take a geophysical anomaly. Like, first, spacing is huge. If you have like 200 meter wide spacing, like look what happened to Alaska with their kimberlite targets.
Yeah.
They're like 250 meter wide kimberlite anomalies potentially, and then all of a sudden they did 50 meter wide geophysical airborne magnetics, and then all of a sudden their anomalies dropped to 50 meters wide in a bunch of different clusters. So
it looks completely
that look 200 meters large, but it's just a cluster. So that kind of,
and that's all to do with spacing.
Yeah, and that has to do with spacing. So with any investor, if they're looking at geophysics data, don't just jump on that big pretty red bullseye. Kind of got to have an understanding of where it comes from. It can be manipulated to give you the answer that you want, but realistically, if a company is using constrained geophysics models, like stuff where you're using mag-sus data or you're using geological aspects of your project and feeding that information into this like visual representation of all these numbers, which is geophysics, which is crazy. It's like mind-blowing when I really think about it. But and so they can use that to say, okay, well, this has more confidence than just say a general one vertical derivative mag geophysical survey that has a big red dot.
Yeah, exactly.
Yeah.
Which is like in the big PowerPoint presentation, the big red dot, right?
Yeah.
They're like, look at this.
And it's like 500 meters spacing. I'm like, nah, bro. Nah.
It doesn't mean anything. Yeah. Well, I guess that sort of wraps it up. I'm glad we tackled this because I think it's something that a lot of people probably want to ask, but being in the industry we're in, it's kind of given that everyone just assumes if you're participating in this business as an investor or a listener or a reader, that you just know what geophysics is or you know what geochemistry is. When
I'm constantly learning about geophysics. I don't have a clue about geophysics.
Yeah.
I'm like, because that's like a whole other world. And so it's just asking questions and being able to.
Yeah.
But I mean, that's the hardest part, knowing what questions to ask.
Exactly. And then that's why we're here.
And that's why we're here, I guess.
And you should get a subscription to the Northern Miner.
And listen to our podcast all the time.
And listen to our podcast.
Because I talk rocks. I love talking rocks. Put me in a corner with rocks any day. That's why we call it a Geology Corner. For me, it ain't punishment. For me, it's pleasure.
Excellent. And with that, we will let you go. Thanks again for joining us. This has been...
the Geology Corner with Lesley Stokes.
And welcome back to studio. That's a really good conversation for me as well, because I love to pick Lesley's brain about like actually running drill programs and setting up exploration targets and like actually being on the ground beside the drill rig, because I have done some field work in the past, more so very early stage prospecting in terms of when we talk about grab samples and chips and channels. But Lesley's actually run drill programs for both large and smaller scale companies, and she's done it globally. So it's always fun to talk to her about what sort of goes in to designing an exploration program, to prospecting, right up to how you put out the news release and communicate to investors and the public what you're actually doing. So it's always good to have sort of a Q&A with her where I'm like, well, what about this? And what about this? So we'll continue to do those. And we'll always try to work in, like we did with SolGold, a case study where we can talk a little bit about some of the technical terms in relation to an actual press release that you can always dig up and read through along with the podcast if you sort of want to look at what we're talking about directly. Let's jump right in. What I have now is a brief, about a 2.5 minute clip from Lukas Lundin. I had a much longer conversation with him, about 45 minutes for our PDAC issue. The bulk of that interview will be running in paper next week, so don't miss that. It's actually some great stuff. He digs into Lundin Gold, Lundin Mining, Denison Mine, so we tackle base metals, precious, uranium. It's a fairly broad-ranging interview, but it's really good, and obviously as someone who's been in the business for a very long time, Lukas has a lot of interesting stuff to say about the bear market, and also about where we might be now in terms of whether this is a new rally or whether this is a new cycle, quote unquote. I wanted just to do a little bit of an actual tease with him. Just sort of a clip that I pulled where he's talking about the state of markets over the last 5 or 6 years, making some of those acquisitions that he did, including Candelaria, including Eagle, Fruta del Norte, which is the Kinross Lundin Gold deal, which has been going quite well for them actually in terms of sociopolitics and permitting. There's quite a good amount of content in such a small clip. He also references things like zinc, so I wanted to run this. This is sort of a teaser primer for the main event, which is going to be the big article next week in the paper. So do check that out. But I'll run that, and I'll be back on the flip side.
It's been a pretty tough cycle. I think we did a pretty good job taking advantage of it. We acquired Candelaria, and then we acquired Eagle in Michigan, and then we acquired the gold deposit in Ecuador, Fruta del Norte. So I think we were trying to make the best out of a bad situation, and those things only come up in tough environments, like Freeport was over leveraged, they had to sell. So all those assets they knew you wanted to sell, was just a major had to sell them, to rationalize. Those opportunities don't come up very often. But the commodity, I think we're in the beginning of a cycle because copper is 250. It's not like we're far away from the highs we had 5-6 years ago. There's some more room here to move, and I think on copper, it's been underinvested for a long time. So I don't know if it's going to happen this year or next year, but the underinvestment and still demand quite high, I think we're going to see a spark again in the prices. A very good deposit, and it's very hard to find good mineral deposit. Doesn't matter if it's gold or whatever metal it is. And also we thought maybe it's been a kind of the situation was a bit sticky there, but I think it was. You can blame the government. You probably can blame the company too. So we saw an opportunity. So we went down and visited with the government and see if they were interested in mining investment before we went too far with Kinross, and they seemed very keen and an open door for us to get involved, and so they gave us because I want to make sure they want to see us, because some of those countries don't want to see an investment, but they seem to be very pro business that way, and they want to start a new part of the economy. They don't have any mining right now, so we got a very positive sign, and so far it's worked very well. So zinc, I think zinc actually has a fundamental. It looks fundamentally like we're going to get a shortage. It looks quite good. Zinc is one of those metals. You have 1 year of glory and 10 years of misery. The glory might be here. But this different is because there's been some supply shut down, and we have actually fundamentally, like centuries, 500,000 tons gone off the market. So you see some good stuff.
And welcome back. And everyone's probably like, Matt, why do you tease us with such short clips? And I'm like, yes, because the big enchilada, the full enchilada, as we say, is coming next week in the paper. So do pick up that PDAC issue, because that interview with Lukas Lundin is just one of the many really good sort of exclusive pieces of content we have for that. Swing by our booth at PDAC, say hi to our team. They'll all be on the floor in Toronto. And as usual, please do like us on Facebook, follow us on Twitter, and check out our YouTube account, because we do have some really cool stuff coming out on social media these days in terms of sort of exclusive interviews with CEOs and analysts and things like that. So do check in. As per usual, please do surf by the website. Think about subscribing, hit that subscribe button, check out our different packages. It is totally worthwhile. And you get some of that more in-depth content, the full interview with Lukas and things like that. So yeah, this has been the Northern Miner Podcast. I would like to, again, thank you from the bottom of my heart. We do appreciate your listenership. And I will be back next week with a full PDAC edition that you can listen to on the floor. So yeah, this has been Matt Keeble with the Northern Miner, and I will talk to you next week.